Hey guys, it's Max. Welcome back to the Daily Covered Color. I appreciate you guys for being here. It is 11 o'clock exactly here in Hill Country. That means it's noon on Wall Street. So let's see what's going on here halfway through the day. We'll start with Defiance like we usually do. I'll actually start with some charts here. Let's go over here to SPX. Now, this is what JEPY trades. Now, notice, though, this is a daily chart of SPX. Boy, that's a pretty good-looking daily chart. But we're going to switch down to the 30-minute time frame so we can see where we need to be within the profit box. These guys sell daily options, and the daily time frame is too zoomed out to look at daily options. You need a shorter time frame, like 30 minutes. Anyway, all right. This profit box is where the profit is. The market was up above it for a little while this morning, but it sold off, and now it's down in the lower quarter. So that means we would expect about a quarter of the available profit. That's the way profit boxes work. If we're on the bottom line, it's break even. If we're on the top line, it's max profit. If we're halfway between, it's halfway. You'd expect about half the profit you're going for. The green area of the box is the intrinsic income or the intrinsic part of the option, and the yellow box is the extrinsic part of the option. Yellow box is what they pay dividends with. All right, so speaking of dividends, we'll look at the dividend estimates here in a second, but look at this. NDX, which is what triple QI trades, they were well in the profit earlier, and they sold off a little bit, but they're still right at the top line, so we'd expect pretty much a full profit on these guys. We'll check in a second. Now, IWMY trades Russell, and they've never been over the top line. In fact, we'd expect a loss right now. They're under the box and going down. Kind of have the tale of two markets right now. But let's look at the spreadsheet. Here's JEPY. These guys, I said we'd expect about a quarter profit is what I said on these guys. Well, they were going for 223, and they're realizing 56. So my guess was pretty close. Just eyeballing it. Earnings per share comes to 79 cents on the month. Dividend estimate is $2.27 on the month, which will make a 61% yield. All right. So now triple QI, I said expect pretty much a full profit. They were right around the top line. So they sold the 19,980 strike, and so we want the price to be above that. Well, it's 19,979.31. So what is that? God, I'm so bad at math. Like 59 cents, 69 cents, 69 cents right there. All right. I used to be good at math. So it's almost a full profit. They're going for 761,000, but they would have to pay 69 cents to buy the option back. Now they sold it for $71. That's still pretty damn good. Anyway, that's about a full profit, basically. So if we go over here to the right, they're realizing $1.28. And that comes to a dividend estimate of $2.45, which comes to about 80%. IWMY, these guys sold 630 options just like yesterday, but they sold the 22.27 flex option today. And right now the market's trading at 22.12. And remember, they need the market to be at 22.27 or above. So the difference between 12 and 27 is going to create a loss for them. It's 14 right there. So it's 14 points in the money. So they were going for 400,000. Now they're losing 400,000, unfortunately. They're up 42 cents a share. And dividend estimates $2.82, which is 91%. Now, unfortunately, these guys have lost the past 4 days in a row, but before that, they were on fire. So, USOY, I've updated the dividend estimate. It's now 99 cents. I checked the latest data, and I made sure the intrinsic and extrinsic calculations were correct. And so there we have that. These guys have the 72 strike option. Doesn't expire till today. When it expires, we'll put however many points it's in the money. So they sold the 72 strike put. So in the money went up for a put, it's below 72. So let's look at USO. yesterday we were doing really well on this option. Okay, well, the USO is pulling back a little bit, but we're still right about at the top line, which is where max profit is. We're 71.87, right? So that means we're 13 points inside max profit or under the strike price. So we'd have to take 13 cents off the profit that we're realizing. In fact, we could figure it out right now. We just do this. So, so they sold this option for 53. Right now they have to buy it back for 13. But they could still hold on to the difference, which comes to 64,000 or 53 bips or 33 cents a share, which comes to a dividend that they can maybe afford to pay of around 99 cents. So let's look over here. This is the buffer report for the indexes. So not all of these are Defiance, but since Defiance is indexes, on the left is SPX indexes, on the right is NASDAQ, or in the middle is NASDAQ, then over here is Russell, and over here is crypto and bonds and just more exotic stuff. And that's why usually the ones up here are down the most or up the most. Yesterday, these were up the most. Today, they're down the most. Go figure. USOY, we just looked at that one getting killed, but it's showing a lot of buffer. It's not down as much as its parent asset. Same with Maxi and YBTC. They're both pulling back, but not near as much as the parent. So that's what we want to see. We don't really have any outperformance on the downside other than TLTW, and that's not by much. And we never talk about that fund anyway. Now that's probably iSpy. Yeah, iSpy. Gosh darn it. I need to generate some new content on iSpy. Let's just look at iSpy individually. iSpy is a great stock. I don't know why it doesn't update automatically. So it's trading at 44.49. It's pulled back a little bit from yesterday. So it's down 16 bips, and the SPY is, well, it's not the SPY. SPX is down 11. Okay. So we just have to update this one manually. Yeah, this one. But anyway, so this one is actually actuality. It looks about like JEPI. It's pulling back a little bit. 16 bips, no big deal. Okay, so really everything's pulling back. Even SFOL and ZIVB are pulling back. That usually means the volatility is going up a little bit. Okay, Triple Q looks really good this morning, as does FEPI, as does Triple QI. So does Triple QT, and so does QDTE. YieldMax not so much. All right. So here's some single stocks. We'll look at these real quick. We'll look at Snowy killing it. Fibby, Snowy looking really good. SMCI looking really good. In single stock land, we have some that are pulling back, but none that are getting as much downside as the parent outside of Sky, which is pretty much getting all the downside. Babo doesn't look great, but it looked great yesterday. But these other ones that are pulling back are showing the requisite amount of buffer that I would expect, maybe outside of GUI. All right, it's early in the day though. The only call spread that's in the money right now is InFly. The next closest one, it still says is BABA. Let's see. BABA and AMZ. So let's look real quick at some of these stocks. Here's Netflix. All right, so let's refer to the sheet and see what they've done here. They've written the 705, but they bought the 715. So something like that. Anyway, they're above max profit, so they just want to go as high as possible. So the higher, the better. Look at this. They're up, a 1 point, or they're up 27 bips. Or, well, that's Netflix is up 27 bips. See what InFly's up. It's actually down a little bit. But AMZ and BABA look close, or Babo, however, we're going to look at the chart for BABA. Yeah, this one is, let's see what these guys have done. They wrote the 89 and bought the 91. Well, yeah, they should be max profit. They're maxed out too. I don't know. I guess the spreadsheet's messed up. Go figure that. I mean, gosh darn it. Well, right here is supposed to be Babo. That's supposed to be the price. Okay, well, I like this. I like these results a lot better. Look at freaking Tesla. Well, that's crash, and it's an inverse one. So I need to, okay, so no, it's not. I'm sorry about that. That one's not really. But anyway, NVIDIA, InFly, BABA, all in the money. And didn't realize they were. I don't. Okay. So that's what we have. So AMZ is still a little bit out of the money. They wrote the 192.5 and bought the 197.5, but yet Amazon's trading at 192.68 today. So let's pull up that chart. Sorry about those errors. Hopefully I got them all fixed. All right. So look at that. Yeah. So Amazon still has a ways to go before they max out their spread. They're right here, they're right here at the bottom line, which is right at the option they sold. The bottom line is at the option they sold. The top line's at the option they bought. That's why the box, you have max profit at the top line or above. Okay. InFly and also NVIDIA. So what did these guys do? They wrote the 120, bought the 123. Okay, you can see today they're a little bit inside their max profit, but they're doing really well. This is 15 minutes behind. The other thing's live, so it looks like they're a little bit under now, but in any event. Okay, Tesla and crash. So for them to be making extra profit because it's an inverse, they would need to be under this one. So I need to change the logic on this, and I need that. Okay, so it needs to say, I guess I could just take the minus out. Yeah. All right. So, but then I need to do that one. I need to remember not to copy that formula down. Well, actually, yeah, I need to remember not to copy that formula down because that's the special formula for inverses. Okay, so everything's right now. So we're caught up on YieldMax. We're caught up on everything I know of. Okay, Round Hill dividends, I guessed 28 cents yesterday. It was only 19 cents, or it was 18.8 actually. So I need to work on my formula, and until then, I'll just go watch Reaching Riches when I want to know what it is, because that guy's on top of it. I actually haven't seen his content in a while, but he's the expert on Round Hill. I really like his content. Reaching Riches. Hey, also big news real quick in the I guess it's the YieldMax universe. When I was in New York, I suggested they do an inverse Alti. Everyone hates Alti, but I just think the world would be better if we could delta neutral all of Jay's funds. If all of these funds had a regular and then an inverse, so people could buy 2/3 of the regular and 1/3 of the inverse, and somewhat neutralize their deltas and try to just extract the dividend. If you're a true income investor, you don't even care about or not dividend. If you're a true income investor, you don't really even care about the price of the asset. You don't want it to go down. You don't want it to get murdered all the time. But that's not the primary concern. The primary concern is the dividend. So the price of the asset is a secondary concern. I was happy to see that the USOY dividend looked a little better today. It's been going like $1.20 or something. I just thought that was high based on the action I've seen. But yeah, look at Panda's video on short Alti. It's just it's great. I mean, people hate Alti. You can buy Salty, or like I say, or buy both of them. And I believe I was in a hurry to get this video made. I would guess that they're calling it short Alti. They just take the stocks in the regular Alti universe and do the short version of them. Just flip it over. If they're doing a covered call, do a covered put. If they're selling a call spread, they would sell a put spread. I just figure it's an inverse Alti, and I think that would be excellent. I think that would be, that would be awesome. Anyway, I'll go watch Panda's video. I'll go watch the whole video. I just skimmed through it real quick, and I was very excited about it. Like I said, I won't be happy till they come out with an inverse to every one of these. And I wish they just had a massive, once they have I want them to have 40 or 50 regular funds, 40 or 50 inverses, and then just do a fund to fund with every one of them in there. All the inverses, all the regular ones. I'm just trying to, I just want the payment. The more different sources you could throw in and mix shorts and longs, you could maybe have a fund that just spits off a huge payment, but the NAV growth wasn't really the main thing. You're just going for a payment from a jillion diverse sources, some short, some long. So, in theory, that's, that what I want. I want a fund that has no underlying risk. The NAV doesn't really go up or it doesn't go down. So it behaves kind of like a bond. You buy it at 20, it stays at 20, but it pays a 30% dividend, 40% dividend, and stays at 20. Anyway, I don't know that that's possible, but that's what I want. So anyway, the more shorts we have and the more longs we have, somebody will make a fund that has everything in it, just a universe. Just call it a universal income fund, and I think it'd be great if they did one of these on the whole S&P 500, or maybe the whole S&P 100, or the whole NASDAQ 100, and had a short version of every one of them and just threw them all into a big bucket and called it an income fund. All right, guys, that's my idea for today. Tell me what kind of fund you guys are looking for. And something else I would really be excited about that they need to do somehow is some kind of fund that has long exposure to volatility. It could even be something simple. Maybe just write a daily put on the VIX, or maybe like a sell synthetic, or what about poor man's covered calls on the VIX? And you maybe only sell half as many as you have synthetics. So you have half unlimited upside to the VIX. But with half of that, you're selling whatever VIX is. It's not dailies yet, but they'd be weeklies, selling short-term options to offset your theta decay, but at the same time having a long exposure to VIX. So you would have crisis alpha. So you would make money when times were bad. You could have a little bonus or a hedge, whatever you want to call it. I think those are the two things I'm looking to see. Let me know what you guys want to see. I'll look it into the comments and react. All right, guys, have a great day. Thank you very much.